Have you ever wondered what a 50% rally could potentially mean for Tesla? Do you think this is the automaker's advantage, which could help it to grow twice its current valuation? Join us as we explore this possibility and discover how legendary investor Dan Ives thinks that Tesla can reach this milestone.
The bond market to the Tesla bull story.
I mean, look, Musk called it out. And then again, it goes back to like that was a disaster conference call. We talked about that, just the way that was handled. Yeah, of course, it's very important because the price cuts, essentially nothing even happens to that relative to the consumer. And I think as Nathan's talked about, ultimately, you need to see that come down. You need to see the China story stabilize. You have a lot of competitors come from all different angles. But if you look at Lucid and others, it's very hard to scale. And I think it just continues to come down. It is still Tesla's world and everyone else is paying rent in electric vehicles.
Tesla is one of the most popular and innovative companies in the world. The EV maker has been on a remarkable growth trajectory, delivering over 1.3 million vehicles in 2022 and expanding its global presence despite facing significant market challenges. Some of Tesla's innovations are its proprietary battery tech, offering high energy density, low cost, and long lifespan, as well as its Autopilot system, which provides advanced driver assistance features and self-driving capabilities. It's also got Supercharger, which offers fast and convenient charging for its customers. These innovations are what set Tesla apart from its competitors, leaving it room to give it the opportunity to make up to 50% rallies in just a few months. So how is Tesla going to achieve this? Let's see what Dan Ives has got to say.
Let's bring in Wedbush's Dan Ives. Welcome back, Dan.
Yeah, great to be here.
Good to be here. Yeah, it's great to have you. Should it be kicked out of the Magnificent Seven? Does it go to 50? I mean, like, where do you start?
I mean, I think 6 to 9 months from now, the stock has a 3 in front of it. I think it's back to above 300 as ultimately, I believe this is more of an air pocket that we're seeing from a growth perspective. I think margins start to trough out, and going into next year, I think numbers conservative. And the sum of the parts, you know, as Dan talked about, I think when you look at battery technology, FSD, autonomous, I could argue it's probably one of the best AI plays out there. To me, this is more of a table pounder opportunity rather than time to hide in the cave.
Can it grow? Can it gain market share? Can it achieve scale if China is weak? If there are issues in China? I mean, if Li Auto is really, I mean, it had a very good quarter. It reached 100,000 units. That's the point when Tesla started making it work, 100,000 units. And it's at that critical mark now. So maybe it's poised to sort of, you know, really win the market there.
Yeah, look, you raise great points. Moses, you know, obviously raised great points. I mean, I just got back from Asia. You know, I was there for 2 weeks. I mean, in my opinion, the China story, the cuts they've done, that's the strategic poker move they needed to do. No doubt, demand softened, but I do believe we're starting to see some equilibrium where I look out into next year, you look at 2.3, 2.4 million units, 40–50% of that needs to come from China.
Dan Ives is one of Tesla's most bullish analysts, and he's also the managing director of Wedbush Securities. This seasoned investor has been following Tesla for years and has now predicted that the automaker could make nearly 50% rally in just a few months, with a target price of $310 per share. How will this happen? Let's find out. Hey guys, welcome back to Tesla Tomorrow. Dan Ives believes that Tesla has a huge opportunity to dominate the electric vehicle market, and he expects it to grow from 5% of total auto sales today to 25% by 2025. He also thinks that Tesla has a strong advantage in battery tech, software, and autonomous driving, and that's going to enable it to maintain its leadership position and fend off rivals. In a previous interview on CNBC, the stock expert talked about his bullish position on Tesla, noting that he sees the automaker as a disruptive technology company that is changing the auto industry and creating a loyal customer base. Dan Ives also added that he's not worried about the supply chain woes that Tesla faces, as he believes that the company will be able to overcome them and deliver strong results in the fourth quarter of 2023 and beyond. How's Tesla going to pull that off? Let's find out. But before we carry on, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Dan Ives expects Tesla to report record deliveries of over 400,000 vehicles in the fourth quarter and over 1.6 million vehicles for the full year in 2023. The analyst also said he anticipates Tesla to announce a new factory in India, adding that there will be a huge market growth for the company in that area. Tesla's facilitated the convergence of innovation, market dominance, and disruptive technology, all of which could pave the way to unimaginable profits. Its market cap has soared above $600 billion at the time of this video, maintaining its position as the most valuable car company. When considering Tesla's short-term valuation, there are a few critical factors that must be evaluated, and these factors can significantly contribute to Tesla's valuation by 2024. These will also be potential catalysts for Tesla's 50% rally. Let's explore them. Tesla's expected increase in expenditure next year is caused by allocating more funds for its efforts to improve the production capabilities at its factories. For this year, the automaker is forecasting a spending bill between $6 and $8 billion. However, in 2024, Tesla expects the total to arrive between $7 and $9 billion. Part of this new spending will go towards upgrades at the Nevada Gigafactory, which is expanding production to include a new line of batteries and the company's long-awaited electric semi-truck. The Semi is especially important for Tesla to break into the fleet market, where customers are eager to break free from the high fuel and maintenance costs. Similarly, Tesla is getting a hold of its 4680 battery cell, and that's going to be another huge catalyst for next year. The automaker has already established a cost-down roadmap through 2026 across 5 areas of effort, including the cell design, the structural pack concept, and the cell factory itself. Several experts like Dan Ives have claimed that the gap between Tesla and the legacy car makers who sell millions of vehicles a year is due to the fact that Tesla is seen more as a tech company than just a vehicle manufacturer. And this is a view that many Tesla bulls and even Elon Musk himself have had of the leading car brand. Musk, whose mere presence as the head of Tesla, reassures investors betting on the company, thanks that the automaker has its market capitalization directly tied to whether or not Tesla is able to solve autonomous driving. In his own explanation, Musk claimed that the potential for autonomy is that its value is so high, and even if there is only a slim chance of autonomy happening, then this is still incredibly valuable. He reiterated that the idea of Tesla owners turning their vehicles into a fleet of self-driving robo-taxis is an idea he once thought would be implemented by 2020. For several years, Tesla's made significant effort to solve autonomous driving, but it's only achieved an advanced driver assistance feature. But Musk has said that the automaker will have a sort of ChatGPT moment very soon. He said that in no distant time, 3 million cars will drive themselves, then 5 million, then 10 million cars. For Tesla, the focus is on building something that's useful in the shortest amount of time, and learning a lot along the way. Likewise, next year, Tesla's Optimus robot is expected to start production, and it could revolutionize the way we look at robots. Optimus could end up being one of the largest and most lucrative products the world's ever seen. This robot will come with its own operating system with basic functionality like communication and movement, although people will have to pay to add new features to make their bot more sophisticated over time. There are several reasons why Tesla's the best company for this job. First up, the company's got the brains and resources needed, and they are investing a ton into them to build up the best infrastructure teams and expertise. Tesla also has the right strategy, a path to market by going affordable with its products first, perhaps using its factories, and then eventually building up to the customers' homes. This is where analysts are so bullish on the company. Dan Ives is also very optimistic about Tesla's future, and he sees the company as a once-in-a-generation opportunity for investors. But what do you think about that thought? Let us know down below and let us know what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.